What is going on, traders? Welcome to this new video. In this video, I quickly wanted to talk about something that I see in a lot of traders when it comes to establishing premium and discount zones. When it comes to establishing premium and discount zones, we have all learned to use the last leg and compare that with price, and to only take sells when price is in a premium and to only take longs when price is in a discount. That would look something like this. So you have a really clear trend on the higher time frame, and you can see that right here price is now coming into that premium zone, and right now you can start looking for sells because price relative to its previous price action was actually in a premium. So right here people are starting to look to sell. Now this all makes sense in hindsight, but sometimes it's really difficult to establish realistic premium discount zones. One of my members today, for example, he was looking at this specific leg for his premium and discount zone. So what happened here was he marked up this high, he marked up this low, this was equilibrium, and this was premium. Now, let's say that this member tried to sell right here, right? With the stop loss right there. So let me clarify that. Let's say this specific member tried to take a short right there and actually got stopped out by placing the stop order right there. Now, this is quite logical. And why is it logical? Well, because if we take a look at the chart, we can see that right here we have a remainder of a fair value gap that did not get mitigated. And this right here is simply liquidity. So we basically had these two parameters going against us. So now your question probably is, so how do I properly identify premium and discount zones? Well, in this case, we would look to the left and we would see where price last either mitigated that fair value gap and swept, or just did one of those things. So if we look at the chart right here, we can see that right here price swept liquidity and started running to these lows quite aggressively. So if you wanted to draw your premium and discount zone right now, you would do it in this fashion, with the middle being your equilibrium. And this would mean that right now price is in a premium. Since we are quite bearish, this would be a great opportunity for you to look for sells, especially after we mitigated that fair value gap and also took out this high right here. Now, of course, we are outside of a session, but one could argue that we could look for entries as soon as we see a market structure shift, which in this case we've got. So right here, I am just on the 1 minute chart. This is that 15-minute fair value gap that you saw. We tapped into that fair value gap, had an insane reaction to it, which caused a market structure shift. And right before that, this was our last high and this was our last low that swept liquidity. Because we swept this low, this becomes your market structure shift. You can then start looking for a fair value gap, which we have right here. And let's say you were looking for a simple 1-to-1 R trade, took an entry off of the middle of that fair value gap and targeted 1 R, you would have already had a profitable position. Now, oftentimes when looking at the charts, you might not directly see a sweep, right? So if you look to the 4 hour, for example, this might look like really clean price action. And on the 4 hour, of course, you could look at premium and discount zones like this. This is our low. And this is indeed our premium zone with a fair value gap mitigation and a continuation. Now, this is valid and this is strong because this is such a high time frame, right? So if you look to the lower time frame to this specific price action, you will see plenty of sweeps. Like for example, right here. This right here showed people that price wanted to continue lower. It then went up to fake people out to the downside, now sweeping this liquidity for us to then start shooting up again, tapping into that FEG and then making our move lower. Then on the next leg, we can see that we didn't mitigate that premium. So right here, there were possibly no entries if you're trading based on PD arrays, so premium and discount zone arrays. And then right here on the 4 hour, you have another great example. You can draw your premium and discount zones based on the high and the low. Right here, you will see that we first mitigate that FEG and have a reaction. And right after that, I'll zoom in here so you can clearly see it. We first have that sweep of liquidity before actually running lower. So this right here is a way to draw premium and discount zones that will actually work. When you do this on the lower time frames, make sure to look for that sweep of liquidity. And when you're trying to do this based on basic structure, always try to look at a time frame like the 4 hour or at least the 1 hour to get a decent view of the market. So to summarize, on the 15-minute, which is a time frame that a lot of traders are trading on, if you want to establish your premium and discount zone, look for the last significant sweep, make that your your starting point. So if it were bullish for Ryan, you would then be looking to a low that swept, So right here, I have two examples. As we can see, this is a bullish trend. What we can see is that right here, when forming structure, we sweep this low, a clear sweep of liquidity. Why we only ran below this low really insignificantly and then had a really strong reaction to the upside. That high will be our endpoint or our top premium level, and this will be our top discount level or bottom discount level. Now, as soon as price comes back into that discounted zone and we perhaps see a confluence like a fair value gap, we could start looking for potential long entries. Now, in the bearish example, we will do exactly the same. We will see a bearish trend. We will then see a violation of a previous high with a clean sweep, clean displacement to the downside. We can then pull our premium and discount zone to the high and the low. Then we can wait for price to return into a premium, and we can take an entry off of a point of interest like a fair value gap or even an order block. And this is how you draw high probability premium and discount zones. I hope you found value in this video. If you did, I would really appreciate it if you could show some love in the comment section, leave a like, and if you want to see more content like this, perhaps even subscribe. We also have a free Discord channel where you can join and find a lot of value from really talented and like-minded people. So if you're interested in that, the link to that will also be in the description. Thank you so much for watching, and I will see you in the next video.